Hello everybody, welcome back to the channel. Today I'm going to talk about how I trade US30 and the way I trade it. I'm going to go into detail. I'm going to go why I took today's trade and why I took, the day before. I think it was like Tuesday, maybe Monday. I can't remember, but we'll look at that on the charts. And I made some good money. In total from these two trades, I made around £2,000, £2,100, and I'm going to go through the analysis top to bottom on why I took these entries. These are all called in my VIP group as well. The chart analysis absolutely played out to perfection, so I will show that as well. US30, be careful if you've got a small account trading it or you've never traded it before, because the lot sizes are very different to normal forex pairs. So you don't want to go on US30, place the wrong lot size, and then blow your account. So just a little word of warning, this isn't financial advice or anything, so be careful out there with your trading. Just make sure you manage your risk correctly, your position sizes, and you know how much you're going to lose per trade and how much you're going to make before you even enter the trade, because you can end up losing a lot of money if you don't do this. You just enter random lot size, maybe you adjust your stop, double it, you can end up losing big money by making those simple mistakes. Firstly, I want to say, follow my Instagram. I post there daily on my story. I posted this trade. You could have caught some pips. Before the move happened, pretty much. And then boom, you'll see what happened. So before I start this, I want to say, I trade US30 the same as I trade any other pair. So when I'm going through this analysis, you're probably going to think, oh, that's just normal forex analysis. And yeah, that's because you don't need to change your strategy for different pairs, or say you're trading gold instead of a currency pair, or US30 is an indice instead of a forex pair. You don't need to change everything. And I see a lot of traders doing that. They think, oh, it's a new pair, I have to completely change my strategy because it's not working. So no, you just need to adapt, maybe do a bit of back testing first before you trade a pair, which you should always do anyway. If you want to improve in trading and actually make money. And also when you're trading a pair like this, because of how much it moves and the higher pip value, if you're using normal lot sizes, you'll be in some insane drawdown if it goes against you and you're not risking the correct amount. So that's also something you've got to be aware of. When you're making these higher profit trades, you have to be okay with that, that bigger drawdown. Obviously, if you've got a proper risk to reward ratio, then you should be fine overall. But if you get those 10 losing trades in a row and you're risking 10% per trade, count gone. So if we go into the analysis here, this was on the replay just before the trade actually happened, and I just want to say I caught the sell down here as well. I'll pop a screenshot up of my profit up there just so I can show you that. So I caught this down here. Pretty simple. We broke out of this area here, so we had a nice break of structure. So this was our last point of structure, so the lower high was formed here, and then we broke out of that. You could have looked for a retest up here to the structure, so like this sort of formation happening, but we didn't get that. Price just continued dropping down, so we got an entry here. After we broke this structure, we knew that we were going to continue down. And this is where traders make a big mistake. They'll see price going down, they'll start selling, but then they're not anticipating any sort of pullback. So if we go on like the 15-minute, let's say, if they were entering a sell right down here on this wick, this candle came all the way back up here. And if most traders, when they're doing this sort of trading, they usually over risk. And from down here to right up here, they're like, oh, it's a fake out, I'm going to start buying. So they'll close their sells and they'll start buying. And then what happens? The move continues. So they get a lot of the time faked out on that sort of move. And also you have to know where to target as well. So obvious targets would be imbalance areas. So you have this here, this imbalance area, which we can mark out. You could just target the previous low before we had the big move up. So you could target, this low here. If we draw that across as well, if we just extend these to the right, extend right, there we go. So we have this area which we can target. It's a nice area. And now where can we look to enter? So the main reason for this trade, we had our imbalance areas. So what we're looking for around these imbalance areas, we're looking for price to come back, and say price comes back to here, we could look to sell. Or say price comes back to fill 50% of this area, which was also the previous structure. So we could see price come up here and sell. And a good way to actually make profit from these pullbacks is by using Fibs, Fibonacci. So if we remove, actually no, let's keep that on and see how accurate we were. If we draw a fib here, it's a normal fib, there we go. And now we refine our entry on a lower time frame. Let's see what happens with this. So we had wick down, came up, tapped the top fib, and this is where we started to drop. So if we actually remove these brush tools here, and here, this area, this is where you can start to see, price start to fall. If we just see, yeah, there we go. So, we had a tap into this area. We see multiple wick rejections. At this time here, we did actually have a small FOMC minutes announcement, a little speech. So that did affect, we had a nice wick up here, tap the fib level. And what you could say is we did also come into this structure, which was previously a support, now acting as a resistance for some of you. So we had this extra confluence here. So now what do? We look for price to come to the downside. And where are our targets? First target, you could say this low here. And if we put that there, let's just say we're entering from here. We target that low there. First target. Second target, we'd have it down here. Why? The fill of the imbalance. This is another good area where you can see the reversal. And obviously third target, I'm not going to draw it, but you could say this area down here where we had that push up from. So technically a little imbalance candle down here as well. Then if we play price on, you can see we go down into profit. This is actually 3 in the morning for us in the UK, and then boom, just before London, absolute annihilation. The price comes down, hits the target, hits another target, boom. 3 targets already smashed. First target, conservative target, hit. Second target, this was a more longer term sort of target, but because of this momentum, I think all indices were falling. Dollar index was falling as well. This target was annihilated with ease. And then also the third target was annihilated as well. And if we actually look at price now, you can see we rejected off this area, this sort of wick area, as you see, and then we had this push back up. If we actually go on a higher time frame, what can we see happen with this wick? Well, we have these big imbalance candles. So what you can see, price came, filled this whole imbalance candle, and almost filling this candle here too. If you see on the 4 hour though, we had this big push down, retest, we caught the retest with the entries, and then boom, another push down. So we could see, another fib entry. So if we remove the first fib from up here, what can we see? Price could come back to, one of these areas, 50%, 38.2%, and then continue to the downside. But because we do have a lot of bearish momentum currently, so we could see price just continue to the downside. And what I'd say, when you're in trades like this and you're fairly new to trading, be sure to secure some profits. Because say your trade, you've still got your stop loss open, your stop loss isn't a break even, but in all this profit you're like, oh, let me just let it go a bit longer. A lot of people also make the mistake of targeting profit targets, not targets on the chart, but they'll say, oh, I'll close when it gets to 300, I'll close when it gets to 400, and then they go and see it keeps dropping, the profit keeps going up. They're like, well, maybe let's go for $1,000. They'll start doing that. They won't be happy with any profit they make, and then also it will end up in them maybe even losing the trade. It could get a quick reversal, they're still praying it goes in their direction, they could end up losing all the profit they were actually in. So you just got to be careful, you know, secure some profit, at least make it risk free, maybe close partials, and then you can go about your day, or even you could go to sleep without stressing about your trade hitting the stop loss because you're over risking. But yeah, key points of this video: keep your analysis simple. Obviously this isn't exactly the full thing of my trading. I wouldn't share that, you know, for free. That's all in my mentorship, which is in the link in the description, where I teach my whole strategy, 2 to 3 live calls per week starting soon. And there's limited spaces as well, so if you want to get in there quick, because it's going to go quick. And also risk management, trade management. Don't just place a trade, no stop loss, no take profit, because you'll probably blow your account. You're going to be wrong eventually. You can't be right 100% of the time. And don't think just because you don't have a stop loss that you can't get it wrong, because, you know, I've learned the hard way sometimes with trading, and, you know, it's not the greatest when you're losing accounts, but as long as you're learning from each lost account, each lost trade, then, you know, you're all good. But if you're just getting worse and worse and worse, not learning from your losses, making the same mistakes again, not keeping it simple, then, you know, that's where you can start losing a lot of money and not progressing in your trading career or journey. So if you did enjoy this little analysis breakdown on how I trade US30, the same as my Forex and gold pairs, smash a like and subscribe, and I'll see you in the next video.